Good afternoon. Back at you with some more monetary news updates. And so today's tone is a little bit different, a little bit more bullish for gold. And so a lot of mainstream sources are now beginning to really speak on precious metals and how important they are to hold in your possession. And so this article here is from the Financial Sense, and it's a conversation from a podcast that they put out with some gentlemen from In Gold We Trust. And it has to do with the idea that it seems like a lot of financial managers now are beginning to really buy in to the whole helicopter money concept as far as the next type of easing that will be unleashed on the public. And so a lot of people are becoming more bullish in gold. And so it's just talking about some forecast as to where, hedge fund managers and people who are responsible for taking care of people's wealth are projecting. So a couple things that really stood out to me in this interview, and of course I'll link it below so you can read it, but it talks about, actually gives a couple names of gentlemen who are really bullish on owning gold now, and they're actually, becoming more vocal about it. And it says here, highly successful fund managers, David Einhorn, Stephen Druckenmiller, George Soros, and so on, they all piled into gold in the last couple of months. And so I think that we are in the verge of going into a second phase, which is the public participation phase, when all market analysts upgrade their price targets for gold. And so when you hear, big wigs start to talk about gold, they obviously know something. And when they start moving their money into it, that's obviously a sign that something is underway or going to happen. And so here, as I scroll to the bottom, it talks about just some of the projections of what the banking sector had forecasted gold at back in 2011, right prior to it actually spiking up. And so they had it at $2,500 and $3,000. And so there, I guess that's kind of where the target range is now for it. But then two of the issues, as I mentioned before, is helicopter money. And here it talks about how inflation is picking up. And so that's another reason why they're beginning to really get into it. And so it says here, our incremental inflation signal is showing massively rising inflation since March. We're seeing quite a lot of U.S. inflation indexes also rising. For example, the sticky price index and also the median consumer price index, they're all rising now. Rising prices, inflation, or falling real estate, real interest rates are probably the most important driver for the price of gold. And then at the very end, talks about helicopter money and how a gentleman who wrote this basically saying that it's an absolute certainty that it will come. It's just a matter of how, what, when, and what it will be called. But he says, we are absolutely certain that sooner or later helicopter money will be implemented, and it will not be called helicopter money, but they will come out with a very sophisticated, perhaps, divided dividend for the people, or people QE, or something like that. So him being comical, but yet, he's saying that it's absolutely certain that sooner or later it will be coming. On to the next article. Here's a video, a little 4-minute or so video from Bloomberg. Not going to play it because I want to keep this relatively short. But it's another gentleman, once again, a guy who's a manager. Can't really figure out what his name is now. But anyway, so the case for adding precious metals to your portfolio. And so in this video here, he talks about why it's important to hold gold and silver. Chris Gapney, Everbank World Markets president, explains why you might want to add precious metals to your investment portfolio. And so in this interview, the guy and the young lady, asked him various questions. And one of the things that stood out that, I would definitely encourage you to listen to this one, is he asked about the gold to silver ratio. And this Chris's explanation was the fact that, 1 to 60 or 1 to 70 is not normal. We're projecting, and we think it'll be good to have normal ratio of, say, 1 to 50. And so when he said 1 to 50, I'm thinking like, wow, 1 to 50, and he said normal. So I'm not sure if that's the context in which he meant it, but, clearly, if it's 1 to 9 out the ground, it would have been nice for him to say, we're anticipating silver to really, basically become on par at some point, soon with gold. And so he's basically just, keeping it neutral, keeping it nice and friendly, but yeah, basically saying there's a lot of room for silver. So just another gentleman who's responsible for, people's finances, and he's very bullish on metals. So he's encouraging people to get it. So that's interesting. Next one here from Market Watch. Came out yesterday. It says why gold's bond with the dollar has broken. And so this article here gives a lot of interesting information as far as how prior to Brexit and all the European Union, and negative interest rates and bond purchases and things like that, how the dollar and the indexes, it gives it right here, how they were kind of on par. But since the whole Brexit, fiasco has happened, it's beginning to gain a little separation to where it's basically saying that as the dollar gets stronger, in the past, gold would go down. But now they're kind of saying that, the dollar is going to remain strong, as well as the demand for gold because of all the stuff happening in Europe. And so more of a, a bullish gold, bullish dollar type of article here. And so they gave a couple graphs that are quite interesting. And if I scroll down to the bottom, there was something I wanted to mention here that kind of caught my eye. Where we go? Yep, here we go right here. Central banks, and this is from Paul Wang, who's Sprott Asset Manager. And so he's, of course, Sprott Asset Management, they're really bullish on gold and precious metals, knowing that there's a lot of turbulence happening in the markets. But if I can go back up, I can read that for you. But in a nutshell, I'll let you read it. But he talks about how because of all of the volatility in the markets, how he's really recommending gold. And I read this: central banks, through their ever more aggressive monetary policies, are, so I'll let that go. Computer's acting up on me. But anyway, good article. Read it for yourself. Check it out below. But once again, pro bullish on gold and the dollar in this investment here. Here's another one here. This is in regards to cash. And it mentions about the fact that since the banking sector is in trouble, interest rates are so low, a lot of people are holding cash and hoarding in the cash. And it's the most, in the last 15 years. So this article here is more of a 35-second video. But once again, a lot of great information just on what's happening currently. And it says here, cash levels are now 5.8% of portfolios, and it's going up a notch from June at the highest level since November 2001. So basically, more people are deciding to hold on to cash, and they made a little joke here saying that people are eventually going to start stuffing their mattress. But because of all the fear in the markets, it says people are not really trusting their banks or the idea that holding digits alone will be worthwhile. And so here it talks about fund managers once again. Fund managers believe that so-called helicopter money will become a reality, with 39% now anticipating more compared to 27% in June. The term refers to money printed by central banks that governments then distribute through the economy in hopes of creating inflation. A similar move called quantitative easing. So once again, another article, CNBC, a mainstream news source, mentioning how fund managers are concerned with helicopter money. So the term helicopter money is really being thrown out there a lot as something that is expected. So I guess they're trying to warm the public up to the idea that there will be some type of easing coming in the form of helicopter money. Here's another one here from Gallup. I thought this was very interesting. It says most Americans foresee the death of cash in their lifetime. And so it says 62% of the people surveyed, roughly, who say U.S. will likely be cashless society in their lifetime. And so this article here goes through a lot of detailed information on how they came up with these numbers and the age demographic and things like that. But it's ultimately saying that majority of people, because they're so used to now using electronic options, fewer people use cash, to where it's just inevitable before, cash is something that's not really even wanted. And so, once again, of course, the older generation who appreciate cash, like to have some cash on hand. But, the younger generation, the millennials, they, only know debit cards and credit cards and digital forms of payment, such as, PayPal, things like that. So it's good to say that because of their lack of monetary awareness, cash will become obsolete one day, and more likely, people will not even know that there was something called cash because of digits. So anyway, good article by Gallup, worth checking out. And then even on to more about digits. The Bank of England considers issuing its own digital currency. And so in this article here, it talks about the idea of a couple of Bank of England economists really, getting behind the whole digital currency movement, and basically saying that the Bank of England probably will eventually experiment with the idea of using digital currency as a way of distributing and controlling banking and saving, things like that for the public. So they list a couple details about the blockchain and how it's, it can be a good idea, and more banks, I think Bank of Canada are looking into it. So more central banks are looking into digital currency, not even really, mentioning much. They do mention in the bottom of this article, but that, most of currency now is digital anyway. So it wouldn't be much different than, what's going on now, other than the fact that, if it's under the bank's control, it won't be decentralized, which means they'll still have control over the system and able to bring digits into the, existence anytime they want. So definitely an article worth checking out when you get a chance. And the last one here has to do with from Armstrong Economics, and it's to do with the whole banking crisis in Italy. And so here, Martin Armstrong basically just answers one of the questions from one of his subscribers or readers. It has to do with the Italian banking system and how things are just unraveling there. And the question was, why are Italian banks in worse shape than most other countries? What happened to the bail-in program of the ECB? Can you explain why Italy is threatening the entire banking system of Europe? And so he goes on to mention how because Italy doesn't have its own currency, they're extremely indebted, and they have a lot of bonds that's owned outside the country. And so as of now, they haven't really done much to really put themselves in position to be able to pay any of these bonds off. And so he actually compared it to what actually happened in the Great Depression, what happened in the Great Depression in the United States of America. And so he goes to actually give a whole historical lesson on how foreign bonds owned in the United States, are some of the things that kind of triggered after, of course, beyond the stock market, that contributed to a lot of defaults, which spread throughout the country. And then he gives a couple of different things here about how, from that point on, the banking sector, bit by bit, from the Midwest to the East Coast, began defaulting. And basically, when they began defaulting, all the savers and people who had deposits in banks basically lost everything. So a good little rendition of history here that he gave, definitely worth checking out. So anyway, 12-minute video. Hope it wasn't too long. Hope you guys are enjoying this. Leave me a comment. I would love to hear your thoughts, and also subscribe it to this, and I will do my best to try to get out more interviews of just giving you basic news sources that you can check yourself, just so you'll be able to say, hey, this is what's happening here and there. Check it out for yourself. Anyway, I would love to hear your thoughts. Later.